All right, perfect. So then the 1099-K, this is a newer form of 1099, relatively speaking, because a lot of those other ones have been around for a long time, but it is issued primarily by credit card processing companies to their merchant accounts. It's also issued by certain third-party payment processors such as like eBay or PayPal or Amazon. What it is intended to do is increase, again, compliance reporting for businesses who may not report all their credit card receipts. In practice, this is an amount nearly impossible to reconcile for most businesses. Much of the information included on the 1099-K would not have been included by the business because it isn't required to report in their gross receipts. So, like deposits or sales taxes, now that's normally not supposed to be part of their gross receipts, but it's included in here because it's ran through their credit card processor. Tips or refunds or other fees are all included on the 1099-K, but a business ordinarily does not include those amounts in their gross income. As an example, let's say you have a law firm that has a retainer as well as other funds which are not income appear on the 1099-K. Many small businesses lack the capacity to separate amounts charged by credit card. And here's another problem is if it is paid by credit card, I didn't want to cover this just yet on those 1099s, those crazy 1099s that we do so much Box 7 reporting. If you're paying it by credit card, you're not supposed to include that in that amount because it's to be reported by their credit card processor. So what ends up happening is that the amounts are basically double reported, and that's where it ends up causing a problem. Is if it is reported by credit card payment, we are not to include it on that 1099 miscellaneous, only if we're paying by cash or check. So you can imagine this does create a reconciliation nightmare, and these variances undoubtedly show up on tax returns and trigger mismatch notices and red flags and even audits at the IRS. So it adds volumes of correspondence between the taxpayer and the IRS. Now, back a few years ago, the IRS deputy commissioner at the time said, hey, you know what, we're going to strike the requirement to reconcile these 1099-Ks to your income, and said that they had no intention of ever requiring reconciliation in future years. So this was back in 2012. However, right now, in 2018, 2019, I expect we're still going to see it happen. We're seeing CP 2000 notices and other examination requests triggered using information from these 1099-K forms. So it is clear this particular reporting requirement is not going away. It's just kind of good to understand this 1099-K form in order to be prepared to handle it, both from the reporting side of creating the form as well as the preparation side to deal with the information received. What our takeaway is, as preparers of these documents or helping our clients, and it may be that this comes as a surprise, think of what is supposed to be on the 1099-K. So these third-party merchant processors, or your Amazon, or your PayPal, or anybody that is reporting on a 1099-K, if that is how it's paid for, you're not supposed to include that in your own 1099 miscellaneous reporting. So think of some of our accounting systems or our clients' accounting systems. The question that I'd ask is, are you aware of or are you separating the type of payment? Are you looking at just the cash and check payments, or are you including all types of payments? Because if it's paid by that credit card, it doesn't have to be included on that 1099, and in fact, it's not supposed to be according to the instructions because it's double reported and it's already included on a 1099-K. So that's one of the takeaways. Now, unless you are one of those third-party network transaction providers, then we would talk a lot more about how this is created. The same sort of rules here, that the filer is the one creating the form, the payee is the one who's receiving it. And they go and separate and say what type of a provider are they, and they go through in all these other boxes in here. The January through December are the amounts processed for each month, and it'll come up and then total basically into one of the boxes up here that says total amount provided. But the main takeaway: don't double report. Don't put things on your 1099 miscellaneous that are already included on a 1099-K. This also has a copy BNC that's online fillable, but most of these really big providers don't really necessarily go to the IRS site to fill them out online on the site. But that's a little bit about the 1099-K and maybe some things that may be a little more unexpected with them, just to prevent the double reporting if possible. They do know that it is kind of a difficult thing to reconcile to, though, especially if there's amounts included in here that show up as total income and ultimately are not really income, as some of the examples we provided. The 1099 PATR. Well, we're going to cover it briefly because the IRS has become more diligent in matching income reported on this form. This kind of is, again, another theme. We're starting to see a lot more information matching being done. It's used by cooperative organizations to report dividends paid to members or owners. The largest and most common cooperative organizations are usually farm-related, and farmers are sometimes a little more acquainted with seeing these patronage dividends. If you're not exposed to farm activities, you may not be as familiar with them, but there's also a number of utility companies organized as cooperatives. Out here in the West, in Western Colorado, we have a lot of utility companies that are organized in this manner. Patronage dividends on the preparation side, they're normally taxable if they arise from the conduct of a trade or business. So that farmer, if he's earning income from his farm, then this is taxable to him. If you're a member of the cooperative, but you don't really purchase from the cooperative in connection with a trade or business, then okay, you may get the form, but hey, no worry, right? The recommendation often is you report it, regardless if it's taxable or not, and then you can, take a subtraction against it, just because it's that matching thing that we're always worried about. If it is a non-taxable, you can add a line in the return and back it out. So if it's not reported, it's just there's a bigger chance that you'll get correspondence saying something doesn't match. As far as filling it out, you see the same sort of theme again. The payer is like the first item on each of these 1099s. Who is it that's creating this form? What's that business name and what's their ID? Who is the one receiving it? What's their ID? And with, like I'd mentioned much earlier in the course, make sure that matches. It will prevent a letter coming along later talking about it being a mismatch. Then it wants to know, well, how much are patronage dividends? How much are non-patronage? If there's per unit retention allocations. So a lot of these cooperatives, this is going to be something that they may be a little more comfortable with. Maybe they've never done the 1099 if they're a newer one, but a lot of these terminology of what they're supposed to put on here. The individual instructions, which go with each one of these, is going to be even more in-depth. So because this isn't something that everybody does, we're not going to spend an enormous amount of time on there, of course. But the due dates are one thing to keep in mind is for most everybody who you're sending this to, the recipient, they get it by January 31st, and then you can file your copy with the IRS by February 28th, or if electronic, you have to April 1st in order to be on time. And it's really important to be on time with these. If you can't, you want to do an extension because the penalties will start from pretty much the day that you're late. And again, if it's a non-resident alien, which is going to be true with all these forms, you want to go and look at these instructions for that because you'll have to do most likely withholding for them. As we look at a 1099 DIV for dividends, the 1099 DIV, again, we get the nice bonus of the copies B and C are online fillable. We still have the red line form for copy A that you have to have. Normally, office supply places, maybe some of the more common ones they have. Some of these more obscure ones, you're going to be able to get them from the IRS. Just give it enough time to get those forms in. They will send them to you, but you want to make sure to get the actual red line forms in order to be scanned. So on the 1099 DIV, it's basically, yes, you have specific instructions and you can have, the general instructions that go with all of them. These are luckily the same nice due dates of January 31st to the recipient and February or April 1st if it's electronic. But there are so many different types of dividends and distributions that if this is an area that you think you need to report some of these, so maybe you are working with, let's say, a C corporation that's giving dividends out to its shareholders. These are to be reported on the 1099 DIV. So it may be that even in practice you think, I just have to deal with the 1099 miscellaneous. You may still run across these forms in practice that you have to know exist and that you need to take care of them. So there are lots of different types of dividends. A lot of them have to do with the nature of the investment, of course. So there's a lot more to these instructions that we could certainly spend a lot of time on every single form, which we don't want to do, and especially if it's not that you want that much instruction for each of them. But look at the manual that I have accompanying it. There's going to be links in there if you want to figure out how to put them on there. But a lot of the same things for when you're filling these out apply. The same FATCA filing requirement, the same second 10 not, the same format, except, sometimes the words change. This is payer and recipient, and then it's the information or dollar amounts in all the other boxes for the most part. Box 4, it just happens to be box 4. You'll notice they stuffed in A's and B's in order to allow space 1A, 1B, 2A, 2B, 2C, 2D, and so that box 4 still ends up being federal tax withheld. So that I always find interesting in there, but that's backup withholding. Payers, or if they have to, pay in withheld amounts of taxes, then that is all in that box 4 for federal income tax withheld. The state amounts, if there's a state tax withheld, it goes in the boxes 13 through 15. So just depending what needs to be put in there for the state as well. As far as how nominees go, if this form includes amounts belonging to another person, that's called a nominee recipient. So you have to file a Form 1099 DIV with IRS for each of the other owners to show their share of the income. So here's something you may not, I guess if we say it may be a little different. If you have nominee situations, and this can happen with other forms as well, you have to furnish a 1099 DIV if you're receiving this on behalf of somebody else. Unless it's a spouse, you don't have to do a nominee return in order to show amounts owed by the other spouse. So that's something just to watch out for nominee type of payments. So that basically means you're seeing amounts that belong to another person. You're a nominee recipient. You're supposed to turn around and file this form along with the company 1096 to the IRS for each of the other owners to show their share of the income. So that's how it's supposed to properly be done for a nominee payment, but just keep that on your radar. If you happen to see that, it is something that should raise that radar and say, oh, wait, there's something about nominees. I got to make sure I probably have to go ahead and file this form. So if somebody gets 1099 INT, 1099 miscellaneous, whatever it is, chances are if you have a nominee situation, you got to turn around and file one of those same forms to report on the other individual or individuals to show their share. So to keep that on your radar.